Hi guys, welcome back. Liteforex broker, Forex portfolio overview. Here we are. Every first trading session of every month we dedicate to me sharing with you guys my personal portfolio, my real-time positions. And going into the new year 2019, what a better way to start the year. Last month I showed you 8 positions I had in my portfolio. Actually, yesterday, the last one of them got closed. The Swiss franc versus the Japanese yen. Really nice position, 460 pips. So I'm really excited. It was just done yesterday. Yesterday, we saw a huge move in the market, right? Came from the Japanese yen and had a huge effect on all of the Japanese yen crosses and, of course, and also on the Australian dollar. So that was pretty interesting to witness. But I got some fresh positions actually in place. 3 of them I just opened. I'm talking about yesterday. So are you ready to start? Let's dive in and take a look, take a closer look at these positions. Obviously, we'll also analyze their technical situation. Alright guys, so we'll have a quick look at the positions themselves before we dive in into the technical picture. I got the pound versus the New Zealand dollar about a week ago initiated. It done pretty well at the beginning. It came back. Right now we got a small profit here. I got the gold. You're probably familiar with this one, right? So I actually fulfilled my promise to establish a bullish position. And you probably remember that trigger level because just I think last session I was talking about the gold and that particular trigger level that I was looking at, and I specifically said if it's going to be crossed, I'm going to enter that trade, and there you go, 7 days right now. Euro Canadian was just opened. We'll take a look at that. Also, the Australian versus the Canadian was just recently opened. I have a pretty old position, 2 weeks of the dollar versus the Canadian. It's doing relatively well, nothing to write home about. And the third position that I've just opened yesterday was the euro versus the pound. So we'll take a look at all of these situations. So yeah, let's head straight to the chart. All right, so I'm gonna start with the dollar versus the Canadian. Last month actually, on the last session, the last portfolio overview, we were still below 34.78. Now, if you haven't watched that session, you can take a look and check that out. But I was aiming at 34.78. That was my price target. And it got taken. But I'm not sure if you remember or not. I showed you the big picture and actually suggested that price is more likely to break that 34.78 and continue on the upside. But I also knew that the safest spot, the safest price target was actually right here, 34.78, and everything from this point up is a bit more risky, and that's because of the bigger picture. Let me show you that quickly. We got a pretty impressive trading range. I'm talking about it's pretty big and it's very wide, right? You can see it on the monthly chart, but it's not very well established, I have to say. We only have here 3 legs in this trading range. So it's pretty obvious why I was aiming at 34.78, right? That was the mid-high key level. But because of the nature of the low we had here, taking the previous one by a big margin, I suspected that it's going to do the same, taking the previous high just as well. So what I did was I divided that move into 2 steps. 2 bullish campaigns, if you will. The first was going all the way to 34.78. When that got taken, basically what I did, I sat on the sideline for a couple of days because I wanted to have a weekly confirmation, a weekly close above that key level that would suggest that there is, in fact, a genuine breakout. And if that's the case, it is more likely that price will continue to the previous high. As I've mentioned, take a look at the previous high. Let's take a look where that is. Right? It was, the previous high was determined around March 2017, almost 2 years. So we're about to take that high, I believe. And as you can see, I've been building up the position slowly but surely. And this is, like I said, the second consecutive bullish campaign. I think we're going to head towards that previous high at 37.90, which means, well, about 150 pip short of that price target. Right, so we're just in the middle of the range between these two key levels. Obviously, the 37.90 represents the previous high, right? I got my stop loss level adjusted just yesterday from 33.50 to 34. As you can see, I keep a healthy distance from price action. So we got the dollar versus the Canadian, still bullish, but not sure for how long. I think we're going to get to the price target pretty soon, but obviously we'll have to see about that. I think my favorite position right now must be the gold, right? Because I was able to build a pretty decent sized position going forward. I just hope this really nice positive momentum will continue. Now, in the last session, not in the last portfolio overview session, just in the last session, I was talking about the gold, and I was connecting the situation in Wall Street with the gold, but I also said that even if the markets will turn around, the gold can continue to move upwards because of its nature, right? It's a safe haven first and foremost when there's panic in the market. But even if things are quite good, still the gold has a good chance to continue on the upside. And here I was basically basing my decision solely on the technical situation. Let me refresh your memory. Things started to become really interesting to me when price was engaging. Take a look at this on the 1207. 1207 is a very powerful key level, and when I saw that happening after price broke that level, it came back to retest it. That was a very powerful sign. Now, just about 2 weeks before, there was the first powerful sign when price was touching base really nicely here on that particular key level, 1182. Take a look at that spike here. So these two events convinced me that price is going up, right? Because these two very strong support levels were obviously holding pretty nicely. So I began to become very interested in a bullish position on the gold. Anyway, that was probably about 2 months ago, and here I also divided the move into two parts. The first part was up until 1264, right? That was taken about 2 weeks ago, and the second part was, and still is, basically from 1264. That was my official trigger level that I was mentioning in our last session. I said that if price can break above that key level, I will engage with a bullish position immediately. But I will take it towards two particular key levels, 1315, which is a big one, and 1328, which is actually the official price target, right? You can actually see that I have two take profit orders, both on the 1315 and the 1328. So I plan to probably close half of my position at 1315 and leave just 50% and try to chase the next one, which is not too far actually, but it is the official one, right? This is the mid-high key level of the black system. I'm talking about the black setup that you see right here, and I think price is going to make it. Actually, I think price is going to do much better than that and continue and take the previous highs, right? Now we're talking about the level of 1368, 1367. So this is pretty much the potential. However, everything above 1328 is a bit sketchy, right? So I'm going to try and aim for the safest place possible, the safest spot, which are these two key levels. And as you can see, I'm just keeping increasing my position as we go along. So as long as price continues to move up, I'm going to continue and push this position bigger and bigger. That's the game plan. All right, gold. Gold is definitely generating gold for us right now. Now, I'm going to move on to the next one. The next one is fresh. This one is probably unfamiliar to you. We're talking about the Australian versus the Canadian. I actually had a bullish position here. I had a very, very profitable bullish position that I've made about 350 pip before closing out as price began to move to the downside. I was actually concerned of a deep downside correction. I'm pretty glad I was concerned about it because that's exactly what happened. Now, I told you we had a huge move, really coming pretty. I mean, that was pretty surprising. Came out of nowhere. Huge move coming from the Japanese yen, and it had big impact on the Australian dollar, which is why you see this incredible spike here, guys. Now, this is the same setup I was showing you the last portfolio overview session, because I had a bullish position that had been doing very, very well. But I closed it. I closed it because I started to notice that price had started to build up. Take a look. A head and shoulders pattern. Take a look. Right, so whenever I hold a position, and usually I hold positions for medium to long term. So it could be from several days and up to several weeks. But whenever I see a head and shoulders pattern coming my way, I obviously try to get out of there with the intention to come back in once that head and shoulders pattern fulfilled itself. Here I was pretty convinced that the head and shoulders pattern right in the middle of the range, right? Because I was aiming at 10070. That was my official price target. But I did start from 92.92, right? I actually got in a pretty nice price when price was still at the bottom. And when I saw that head and shoulders pattern, what I thought was, it's amazing to me to see this actually manifesting right now. I actually thought that price is probably going to visit that same key level it broken, right? We're talking about probably 3 weeks ago. Talking about the 94.47 here. That's a powerful key level. So, I thought that price was probably going to retest that level from above, and I don't want to be there when that happened. I can always go back right in once that move is over. So that's exactly what I did. I got out. I took a pretty healthy profit, and I went to look for opportunities somewhere else. But I still kept my eye on this one. And yesterday, it's actually today. Just take a look at this incredible move, guys. This is unbelievable stuff. At some point, price was trading at 92.20, right? That's 227 pip below that key level. But guess what? It made it all the way back, right? This trading session, this day, is not over yet, but I can assure you, it is, you can never be sure in the market, right? But this is really as close as possible to being sure. And I'm talking about the fact that price will remain above 94.47 by the end of the day. That's my guess, right? Which is why, take a look at this huge spike. When this spike started to form and price just got back above 94.47, I actually started to figure out that price is probably just retesting that key level from above, just as I thought it would do. Because when it was 200 pip below that key level, I was convinced it's going to crash that key level. You know what I mean? So I thought I'm probably not going to go back into a bullish position here. But to my amazement, as you can see, it went all the way back and left just this huge spike. So what I expect at this point is that, considering this level will hold, right? We need to have it. It's not enough to have that daily close above 94.47. We actually need to have a weekly close, right? Take a look at the weekly bar. That would be very important. A weekly close above 94.47 would only push me to increase the position. Right now, it's very small. It's very small still because we're still in a red bar, right? It's still kind of a, a bearish bar. And I do not like to, to catch a falling knife, so to speak. So I started very, very small. Right now, I'm kind of testing the water. I would also look. This setup is actually a big one. It's coming from the monthly chart. I just switched to the monthly chart. And you know what? It's also very important that price will remain by the end of the month. I mean, the month just started, but it should remain by the end of the month, obviously above 94.47 just as well, right? I have a strong feeling it will because I think it was just a technical correction. That's what it was. A technical correction of what? Of the first upside segment, right? And, it's no surprise that it was completely broken by that mid-low key level 94.47. So at this point, I expect price just to resume the original upside move and complete the leg. We're talking about here, we have 1, 2, 3, 4. We're playing out the fifth leg, right? And I've just pulled the trigger, aiming at 10070. Yeah, we'll see how it goes. I think it's going to be a hell of a ride. Alright, so this is the Australian versus the Canadian. Let's go ahead and take a look at the rest of the three positions that I have. Alright, so the fourth position in place is the pound versus the New Zealand dollar, relatively new. Now, this is a second consecutive bullish campaign that I have on the pound versus the New Zealand dollar. The first one was very successful, although I wasn't able to build up a big enough position. It went so quickly. I got in around 85 and took a position all the way to 89. Right here, you can see that key level right here, 88.99. We'll call it 89. So I also divided the potential move into two steps. So the plan was to take the profit at 89, split, and come back if price can sustainably break that key level. So that's exactly what I did. I got out, and price actually did come off a little bit, but then it come back up, and I thought that it's going to be the second attempt on breaking that key level. It's probably going to be successful, and I quickly reopened my bullish position. So this is the second campaign, but it's pretty fresh in terms of position. I also have a small position here as well because we've just started, right? We've just crossed that barrier at 189. Let me show you the big picture. Quite interesting. This is the setup. This is the setup, symmetric setup. You can see that it's pretty well established, right? We had the first leg that was back, actually back at 2017. That was the first leg, believe it or not, the end of 2017. And all across 2018, we had the second leg, followed by the third leg, and all the way up fourth. And right now, we had the fifth from coast to coast, pretty much. And you can actually see that price was breaking out of the top key level at 2.01, right? And at first, it looked like it was going to break out of the system. But then it came back, and I switched to the monthly chart and take a look how it looks like when it's filtered with the monthly chart, right? There was just a spike here, so I knew that the setup is very much valid, right? And I should continue work with that system. So I did, right? So what price did was it came all the way back, all the way to the bottom key level at 83.23, and take a look at this really nice touchdown here. Really lovely stuff. Price just completely turned around at that point after leaving that spike, and that's pretty much where I became very interested. and initiating a bullish position. I knew it's going to be a long-term position, right? From roughly the level of 84 or 85 all the way to 95. That's 1,000 pip. So it must be medium to long-term perspective. Now here's what I find very encouraging in this story, right? Because it wasn't enough to break that 89 barrier with just a daily close. I needed to have a weekly confirmation. Take a look. We got that last week, right? Take a look at the close. 89.17. And you know what? Take a look at this week. It's even more encouraging because this is kind of a reconfirmation, right? You can actually see that once got broken, this week had started on the downside, right? So it was challenging that same level again. And take a look. This is how it looks like right now, right? There's a spike here that is trying to tell us that this 89 level was an important pivotal point, and it got crossed, right? The point of no return, so to speak. So I'm pretty confident with this bullish position, and I'm glad that we're just starting with this. So we have, potentially speaking, about a little over than 600 pip, right? That's pretty much the game plan. I'm going to try to take this all the way to 95.44, which is just where the next natural key level lies. All right, that's interesting stuff. I mean, we also had a monthly close, by the way, right? The highest authority possible, which was also, think about it, it was a yearly close, right? That was the last month, December. And you can actually see even just, you know, in the last few days in January, in the fresh month, you can actually see the spike that's starting to pop right here. So price was already testing that key level from above. I don't know. It looks pretty good. So we'll see, right? That's a pretty fresh position. A position that I actually initiated just yesterday was the Euro versus the Canadian, guys. Right now it's going a little bit against me. It's also a very small position because usually I start very small. But here I decided to take this one up. I'm going to show you the situation. It's really fascinating stuff. So here's the bigger picture. All right, this is the monthly chart. And you see here this massive, really massive sideways movement that I was able to pinpoint with my blue system here. I'm talking about this formation. First leg, second leg, third leg, fourth leg. Take a look at the fourth leg, by the way. Touching base really nicely on the top key level here, 59.17. And I'm showing you this because ever since then, it was kind of obvious to me that price is starting to build up, you know, the next downside leg. From the bigger perspective here, right? We're talking about the monthly chart here. So this is the major trend. So that's good to know that the major trend is going down, but it's not enough. Obviously, the monthly chart is too crude to work with. So I needed a second setup, a lowercase, trading range that would be that I could, fine tune my actual entry, right? And I think I got it. Because the last few months, actually, price was trading in a lower scale trading range. Let's take a look at that. It is, by the way, it is marked by the purple system here. Take a look at this from the weekly perspective. We're talking about relatively non-established sideways movement. We only have 3 legs, and the third leg was just established, right? But I want to show you something really interesting. Think about, like I said, from the bigger perspective, I think we're looking at a downside trend, and we just happen to have an upside correction. So when I say downside trend, what I mean is that I think we have the first downside segment, right? The first segment in that downside trend, followed by an upside correction. The reason I say this is because Well, you see this black dotted line right here, price tag 56.13. Now that is the mighty 61.8 Fibonacci correction level, right? The most important correction level, according to the literature anyway, but it is a really important correction level, 61.8. So if you measure the whole downside segment from the very top to the very bottom, you'll find it right here. But here's the good stuff. Take a look at the reaction we had here in, well, this week and last week, right? Take a look at these two little spikes. So price was actually, you know, threatening that level, trying to break through, but it failed, right? Price began to capitulate. That's exactly what I wanted to see. I wasn't ready to establish a bearish position just when price just touched base on that key level. I actually wanted to see some visible reaction, some turning around, and when I got that, well, that was yesterday. Take a look at that move. And here I'm actually showing you, you know, with that rectangle, yellowish rectangle here, you can see how much respect price paid to that key level from the, even from the daily perspective. Take a look. 4 consecutive spikes here, trying to break through, all of which failed, right? And then a really strong move that broke that 54.25, which I've signaled as a trigger level, right? That was actually my trigger level. So both the fact that price was unable to break above 56.13 with such a nice reaction, and the fact that it got straight and went straight to break 54.25 was enough for me to initiate this bearish position. I started very, very small because it's just a daily close, right? I'm very cautious when it comes to the daily close. I see the daily close as just an indication. What I really would like to see is by the end of the week that we have a weekly close also below 54.25. That will give me the confidence to start and increase the position significantly, because that's, you know, that's how I do things. I try to build up position only when price goes with me. When it goes against me, I try to reduce the position. Usually a lot, you know, long before it hits the stop loss level. Right now, here you can actually see the reaction. It had not only with that 61.8 at 56.13, but also the reaction it had on the 54.25, right? We saw that daily close, but from a weekly perspective, you can actually see it's just a spike right now. So this is prematurely, initiated, basically. I usually go in a little bit before the official trigger, and I start small because, you know, I don't want to lose, I don't want to sacrifice many pips. Sometimes you have to, you wait till the end of the week, and a few days could actually have a huge impact. So usually I like to start small, and when I get that weekly confirmation, that's where I begin to build up the position. So right now, price actually moved away from that 54.25, showing us that it is a support, right? An important support level to reckon with, right? We definitely need to understand that. So it's obvious to me that in light of this reaction we have here, a close below this particular key level is a must, right? Is a must. But when I talk about the potential of this move, so we have the long-term potential, right? If I'm going to take, again, the big picture, long-term potential is huge. All the way to the lower section, we're talking about the level of 43.89, right? But that's too long-term for me, anyway. This is for investors, pretty much. I consider myself to be a swing trader slash position trader. So I'm mostly looking for the medium-term trends, not the long-term trends. And the medium-term trend would have to be a move within the lower scale system here, the purple system, straight to the lower section. Let's take a look at that. So now, like I said, only if it's going to be able to break below 54.25, right, genuinely, it will continue, it will start to build up, you know, the next downside leg. We have here first, second, third. We're going to have the fourth leg taking the lower section, which is why I'm going to aim at 50.72. That's going to be enough for me. We're talking about 400 pip, right? 400 pip. That's pretty much what I would like to see. Price going straight to the lower section. At that point, I'm not sure what's going to happen. Price could continue and break that, you know, break that system completely, break that bottom key level, 47.56, and head straight to the lower section of the big setup. Or we could have another upside leg and then another downside leg, which will break that local setup and head straight to the bigger one, right? But yeah, I mean, I try to keep it simple. So I'm going to try to aim at 50.71 with an important secondary target in the way at 51.96. We'll see how that goes. Hopefully, I'll be able to show you this position next month, but we'll see. Now, the sixth position that I have in place was also initiated, well, today, actually. At the very beginning of the trading session, I pulled the trigger on a bearish position with the euro versus the pound. Now, as you can see, I have two short positions on the euro, right? So I think the euro, fundamentally speaking, and I think I've mentioned that before, is a mess, right? And I'm actually quite surprised that it hadn't collapsed yet. I'm talking about the euro, and I'm talking about all the derivatives of the euro, all the crosses as well. I think fundamentally speaking, I mean, I don't think the market had priced in the terrible situation that's going on in Europe, right? Both from the demographic, the economic, the political, everything you touch is a mess. And I think the market had not priced that in yet. Or it doesn't recognize the severity of the situation, which is a bit odd. But I think that we're gonna see that, right? We're gonna see that at one point or another. And when I was analyzing the euro versus the pound, I found this particular system in place. This is quite fascinating. This is really one of the weirdest trading ranges that you can find in the market. I mean, first you can see how hectic it is, right? It's very violent, but it's also very tight, right? This is the weekly chart. It's tight, but it's very long. Take a look how long it is. This trading range, and obviously I'm talking about that purple system, right? So I'm pinpointing this trading range with my symmetric system here. This is the purple system, and you can see where it started. This was the first leg. Take a look. Roughly around the middle of 2017, right? Amazing. And it was pretty violent, like I said, going up and down, but it kept itself within the limits of the system. And when price just landed on the top key level, take a look at this, guys. This is pretty interesting stuff. Take a look at this touchdown. Boom, straight to that 91, which is the top key level. By the way, taking the previous highs by a very small margin, but still. And you know, it also, I mean, take a look, it's kind of trapped between, it's trapped in the higher section, right? It's trapped between the top key level and the mid-high key level, right? The mid-high key level, 89.64, which was, by the way, my official trigger level, but I was, but since price did not break it, I didn't get in. And when it went straight to the other side, touched base on the top key level, I decided that this is probably a good time to get in. But my official trigger level was at 89.64. And take a look at this lovely really lovely reactions we had here on that particular key level. So as you can see, price is completely trapped between these two levels. But if I read this correctly, and sometimes I don't, you know, but if I read this correctly, I think we're looking at the very end of this leg, this upside leg, and we're about to witness a downside reversal and the build-up of the next sixth leg, which should, by the way, break that system completely, break the setup to the downside and head straight to 85.35, which is my official price target. 85.35. This is a powerful key level coming from a bigger setup from the monthly perspective. But I will say this, I'm also going to address this particular key level. In case I'm wrong with the counting of the legs, if it's not the sixth leg, it's not going to break the setup. So it's going to continue to trade, you know, sideways. Which means that I would have to be very careful when price reached that 88.12. This is the mid-low key level, very, very important one. So if price is going to, and this is only, like I said, only if price will actually begin to turn around. Right now, it didn't do that yet. Once again, I'm kind of jumping the gun, right? It's another kind of a premature entry here, because the official trigger was at 89.64. But right now, I think you know, the risk to reward ratio here is pretty attractive, as price is very, very close to the edge. But like I said, I'm not going to, well, I'm going to keep this position small until I see some red, right? Until I see some red movements here. Price is starting to move downwards, not just with a spike here, but seriously moving downwards and basically approaching that 89.64. That's going to be good. Once breaking that 89.64, only then I plan to you know, to increase the position and try to take it to 88.12. Probably take 50% out, 60% out, and try to hold you know, some part of that position all the way to the next one at 86.76 and eventually 85.35. So yeah, that's the situation here on the euro versus the pound. Like I said, I think the euro is trading very, very high, you know, with regards to if you compare that to its fundamental situation, to its political situation. I think a huge downside move is well overdue, right? It's well overdue, and yeah, we'll see how it goes. I mean, but I wanted to represent my fundamental belief on the eurozone with these particular position on the euro pound and on the euro versus the Canadian. So there you go. All right, guys, that's about that for this month, January. This is my portfolio. As you can see, fresh positions are in place. I'm gonna try and write out all of these moves. Obviously, some of the positions will be more successful, some will be less successful, but we will be here next month to follow up on the situation in the market. And I'm gonna you know, keep you posted with regards to my my portfolio and my positions yet again. In the meantime, I will say goodbye and have a great trading day. Till next time, be well.